Hi, everyone, and welcome back to another episode of Red Thread. I'm Aiman, an analyst with the APAC crops team, and I spend my days tracking vegetable oils and the lauric oil complex.
And I'm Rob, a principal analyst with the crops team. I cover the broader vegetable oil markets along with a handful of other commodities. Today we'll be discussing the latest developments across Asian veg oil landscapes and highlight some of the key themes from this year's Price Outlook conference that just wrapped up in Kuala Lumpur.
It's been a busy start to 2026, so let's get into it.
Sounds good. So, Iman, to start things off, can you walk us through what the supply outlook is for palm oil for 2026?
Generally, we're seeing ample palm oil stockpiles in Malaysia. The recent NPUB data release showed a seasonal monthly decline in January, about roughly 14% lower than the December print, but still the largest stocks to end January in 7 years.
So, considering palm oil's linkage to weather, how does the January decline compare to previous years?
So in January, the output print is considerably higher than previous years. We're looking at almost 1.6 million metric tons. And if you compare that to the 5 year average of roughly 1.2 million metric tons, you can definitely see the scale. In fact, Malaysian production has been outperforming the 5 year average every single month since March of last year.
That's a massive gap when you look at overall production. So, what could be the key factors that's driving that improvement? Is this just a result of perfect weather?
Yeah, so weather has definitely been conducive, but there's more to it. We're also seeing considerable yield recovery in fresh fruit bunch production, specifically in East Malaysia. And this is likely due to better plantation management practices, such as higher fertilizer application and better labor availability following the disruptions of the COVID-19 pandemic.
Okay, so that's got to explain a lot of the high stockpiles. What is the outlook on the demand side of things? Seems like palm oil is losing a significant chunk of its market share to soft oils, especially in key markets like India.
Yeah, you're absolutely right. So Malaysia's stockpiles breached 3 million metric tons to end 2025. While we did see a drawdown in January, current stockpile levels are way above the 5 year range. In fact, the last time Malaysian stockpiles were around 3 million metric tons was in 2019, where India's effective tax rate on imported palm oil exceeded 40%.
So it seems like Malaysian exporters will really have to discount their stocks to offload supplies. Especially when considering import tax rates are a lot more favorable into India. So we've focused a lot on Malaysia. Can you tell us a little bit about the palm oil supply situation over in Indonesia?
All right. Yeah. So in this week's Price Outlook conference organized by Bursa Market Derivatives here in KL, we saw that GapKey showed their data verifying our expectations that Indonesian palm oil output would see a significant year-on-year rise in 2025. The output print reached a record high of around, well, almost 52 million metric tons, up 8% from the 2024 figure. We're expecting a slightly lower annual rise in 2026, and this is mostly due to a normalization of weather conditions and the recent government seizures of private plantations, which may lead to slightly poorer management practices.
It seems like the government seizures are definitely something to keep an eye on, but overall, it still seems like there's a pretty bearish supply story for palm oil. And I guess you also have to take into account that the Indonesian government recently paused their plans to increase domestic blending rates to 50% in order of maintaining their current 40% blending mandate target, right?
Yeah, you're right in the sense that the demand levers are kind of shifting. Uh, so, Rob, can you explain a bit to us about how Asian veg oil demand markets are sort of shaping up?
I think anytime you talk about Asian veg oil markets, you really have to start with China. And I think one of the biggest stories right now in the market is Chinese soybean oil. So there's been huge volumes of soybeans arriving recently, whether it's US beans going into strategic reserves or cheaper Brazilian beans going into commercial hands. But what we've been seeing with this has been a considerable amount of soybean oil flooding the local market.
Yeah, I've heard that the Chinese domestic demand for soybean oil is quite sluggish. So how are they dealing with the excess supply?
Yeah, that's right. So with that sluggish domestic demand, we anticipate that China will continue its emerging trend of exporting more soybean oil. So current volumes have reached about 300,000 metric tons in the last quarter of 2025, and we're anticipating that an additional 700,000 met tons could ship in the next three quarters of 2026. This is especially likely if Chinese crush remains strong and we see the resumed imports of Canadian canola seed in the coming months.
Yeah, that should definitely put a cap, especially on India's potential palm oil imports, considering they imported a majority of Chinese outbound soybean oil shipments.
And it's important to remember that they're looking to rebuild their domestic veg oil stocks. Can you explain a little bit more about what's going on in India?
So India's domestic stockpiles are currently well below historical levels, and part of the reason why they're not buying veg oils is due to unfavorable FX rates. So the rupee has been weakening under the weight of trade barriers from the US for most of last year. And then we also saw the Malaysian ringgit being on a total tear because of favorable economic conditions, sort of pushing up uh, sort of the growth expectations coming out of Malaysia.
So it sounds like all of those factors are squeezing palm oil import margins, right?
It's left Indian refiners adopting a more cautious sort of hand-to-mouth approach. But there is a silver lining. Rob, what about the recent trade pact between India and the US?
Yeah, we're still awaiting the finalized details there, but it definitely has the potential to be a game changer. India and the US recently put out some framework that could pave the way for lower tariffs facing US soybean oil arrivals. So we see this as doing two things. First, it would lead to strengthen the rupee, and second, it would bring cheaper US soybean oil into the country.
So between the US-India pact and Indonesia's reversing of the B50 mandate, it does sound like we're expecting a more dynamic year when it comes to Asian veg oil trade.
Absolutely. Bottlenecks are starting to clear, even if the price signals are a bit messy right now.
Yeah, all right. That's all the time we have for today's deep dive. Thanks for tuning in to today's Red Thread episode.
And don't forget to check out our full reports on core, and we'll catch you on the next Red Thread episode.